So the second abnormal situation under basis period is the change in accounting date. When a company decides to change its accounting year end. So that's change in accounting date. And what does the law say? The law focuses on the year of failure, right? The law says you should focus on the year of change or the year of failure and 2 years after. So you find the basis period and the assessable profit under the new accounting date and then under the old accounting date. Then the tax authority would pick the higher. Okay, so let me paint a scenario. Let me put an example so that we can understand that. XYZ Limited had an accounting year end of probably 30th June. They report 30th June every year, and they now want to change to 31st of December every year, right? What you need to do is to identify the first year of failure. The year of failure means the year that they failed to prepare their accounts to the old accounting date, that is to 30th of June. So a typical question will come like this. Let's say year ended, this is year ended 30th June 2005. They'll say year ended 30th June 2006. Then year ended 30th June 2007. Can you see that everything is normal? 12 months. Look at the accounting year end is correct. Okay. Then you can now see something like period to, let's say, period to 31st December 2007. Can you see that? Then they now continue year end 31st December 2008, year end 31st December 2009. What does this mean? It means that they have changed their accounting year end from that is a normal reporting account at 30th June. It's now 31st of December. Do you understand? So that is an abnormal situation. Once they change it, the tax law that governs change in accounting date under basis period would also apply to this situation. Do you understand? So the first thing is to identify the year of failure. Ask yourself, did they fail in this year, 2005? They didn't fail. They reported at the end of that. They reported at 30th June 2005. Did they fail in this year? They didn't fail. Did they fail in 2007? They didn't fail. Did they fail in 2008? They failed. Some people now can pick 2007 as their year of failure. They didn't fail in 2007. They failed in 2008. Can you see? First failure. They still reported in 2008, but it has changed to a new one, to a new accounting year end. I'll give you another scenario to also make you understand this. So can you see that? So the year of failure, just write somewhere, year of failure is 2008, not 2007. So because most people just pick anywhere they see period to 2007, that's what they will pick and say, oh, that's their year of failure. Then they now say 2007, 2008, 2009. No. Always look at the first accounting year end. That is the old accounting year end. Do you understand? I'm going to go over that again. You look at this. This is the way it is always going to come. They're always going to show you like this. There will be a time where the period will be disrupted. If you look at this period, this is 12 months. Whenever you see year ended 30th June 2005, you already know that it is what? It's 12 months. As it started on 1st of July 2004 to this. Then this one said 1st of July 2005 to 30th of June 2006. This one also 12 months. But from here, look at this one. This one started 1st of July 2007 to 31st of December 2007. And that is 6 months. Do you understand? So this one was 12 months, 12 months, 12 months. They were reporting with, then at this point, they said they want to change. They want to start reporting at December. They want to start reporting at 31st December. They want to change the accounting year end to 31st December. Then they have 6 months here. Sometimes it could be 18 months. It could be 25 months. It could be anything, but it won't be 12 months. Once you see period 2, it is not 12 months. So this is not the year of failure. 2007 is not the year of failure. The year of failure is 2008. So the year of failure is the year that the company failed to report. Do you understand? So it's 2008 as the year of failure. After you get the year of failure, which is the major challenge, every other thing is simple. Just pick the 2 years after, which is 2009 and 2010. Can you see? So let's do another example to identify our year of failure, and then we now solve proper questions. So let's say a company, ABC Limited, they are reporting 31st of March every year. Then they now want to start reporting 31st December every year. So let's say they gave us the following information. Year ended 31st March 1995. Year ended 31st March 1996. Then they gave us period to 31st December 1997. Let me even stop here. From here, what is the year of failure? From here, the year of failure is what? Write it in the comment section. What is the year of failure? Write in the comment section. If you say the wrong thing, you now edit it. So from here, you can already see. But let me complete it. Then they now say year ended. At this point, they've already changed. Year ended 31st December 1998. Then they continue reporting 31st December. So you can already see from here that the year of failure is the year that they did not report at 31st of March. And which year did not? It's 97. It's 1997. Can you see that at this point you pick what we have here, period two? But here, you can't say, do you get my point? So the challenge is in identifying the year of failure. And once you're able to identify the year of failure, you can start to solve from there. So we're going to solve examples on change in account, change of accounting date or accounting year end. So I'm sorry I solved only one example on commencement. It felt like the video was already becoming too long and maybe most of us will already understand. So look at your question on the screen. It says, Alhaji Mekadi has been trading for some years and he decides to change his accounting year end to 31st December. So it means the new date, the new accounting year end is what? 31st December. His account shows adjusted profit as follows: 12 months to 31st December 2001, 18 months, which is not normal, right, to 31st December 2000, and 12 months to 30th June 1999. If you see, they gave it to you in descending order, right? They said 12 months to 31st December 2001. They gave you the profit to be 180,000 naira. Then they gave you 18 months to 31st December, right? 1999. And they gave you 12 months to 30th June 1999. So if you notice, they've given it to you in descending order. See, 1999, 2000, and 2001. So of course, you know that this is the point at which there was a change. So what are you supposed to do first? Identify your year of failure. Then they said they want to start preparing account. They want to start preparing their account to 31st of December, right? So that means they're preparing it at 30th of June before. 30th of June 1999. The next should have been 30th of June 2000. So it is in year 2000 that they failed. Not because year 2000 is the one here. You saw the other scenarios I gave you. You have to ask yourself, the last thing they paid was 30th of June 1999. The next should be 30th of June 2000. But we don't have. So our year of failure is year 2000. After you get that, then you now start your tax. You now start writing tax year. You start with year 2000. You always start with the year of failure. In commencement, you start with the year of commencement, right? So year 2000. Then you pick how many years after? You pick the 2 years after, which is 2001 tax year, 2002 tax year. Simple. What do you do next? You say your basis period, right? So you get your basis period. If you were using the old what's it called? The old dates. You get your basis period using the old date and the assessable profit. Then you also get your basis period using the new date. I'll tell you the rationale behind this. The tax authority, I think they might be wondering that why do you want to change your accounting date? Do you want to use that one to be paying less tax? So that's the law. So they compare the old date and the new date, then they pick the higher. Remember that in commencement, the commencement rule will apply, but you as a taxpayer can you have the right of election to pick the lower tax, right? To pick the lower tax if actual year or preceding year basis is higher for you. So if you've not watched that one, go and watch that one first so that you can understand. Now let's start. The basis period for this, the old dates. This one has no rule. This is the only rule. There's no rule of date of commencement to no. What is the basis period? So the tax year 2000. What is the normal basis period? The normal preceding year basis. They didn't tell you that the business just commenced. So we know that the normal basis period for an ongoing business is a preceding year basis. So you already know that this will end in what? 1999, right? So what is the old date? The old date was 30th June. So you already know that it is what? 30th June 1999. 12 months back will be 1st of what? July 1998. You've gotten that. We'll go and now start looking for the profit and all of that. For this one, you already know that it will continue, right? 1st July 98, right? 1st July 99 to 30th June 2000. Makes sense. And the next will be what? 1st of July 2000 to 30th of June 2001. So for a basis period, right, of an ongoing business, there must not be gap between the end of a basis period and the beginning. So that's even one way to know if you're correct. Can you say 30th of June 1999? The next should be 1st of July. After June is July on a standard calendar, right? So this is the old date. This is the way it's supposed to have been. But this company, what's their name? Alhaji Mekudi, they said they want to change. So tax authority said, no problem, we will change for you. But if it's the one that is higher is the one we will pick on these first 3 years, then we would continue on your new dates. Do you understand? The law, nobody understands the law, but you follow the law. Or allow it make sense to you. So you use the new dates to evaluate now. So the new dates, you start from the tax year. How do you know your basis period? I already said basis period follows preceding year basis, Abi. But how do you know your basis period if you don't know your tax year? Always ask you, what is my tax year? My tax year is year 2000. So my basis period on a preceding year basis means that a tax year of 2000, the basis period must end in what? The year before 2000, which is 1999. Abi? And don't forget new dates. So you are having what? 99. Just know the year first. Now, so what is the new reporting date? It is what? 31st of December, right? So 31st of December, 12 months away will be what? 1st of what? January 99. Does it make sense? It does. It does. It does. Once you get the first one, you already know that the next one should automatically be 1st of January 2000 to 31st December 2000 and 1st of January 2001 to 31st of December 2001. So once you get the basis period, you now start thinking about to get the profits, the accessible profits that was made between this period and this period, this period and this period, this period and this period. When you get each of them, you now cast which of them is higher. If this one is higher, old date, the tax authority will say, sorry, for these 3 years, you have to pay based on the old date, and you can continue with your new date. If the new date is higher, they'll say, God, they won't catch you. You'll be taxed based on the new dates, you understand? So let us find our accessible profits. Let me just quickly go over this basis period again, because I feel like this is where people have challenges. I said the first thing to do is to identify your year of failure. Once they tell you that somebody changed their account date, ask yourself, where is the year of failure? Once you don't know the year of failure, you can't do anything. When did this company, Mekudi, where did they fail? What was their old date? 30th of June. They prepare accounts 30th of June every year. So they did for 1999. They're supposed to do for 2000, but at this point, they failed. We don't have 30th June 2000. Instead, they went to go and do 31st December 2000. They said, no, they want to start at December. So shift it very well. That's why it's 18 months. It's not 12 months. Makes sense, right? So your year of failure is year 2000. Then pick it as your first tax year and put the next 2 tax years. After you do that, assess them under the old date and assess them under the new date. So when you know your tax year, when you know that tax year 2000, right, you ask yourself, what is the basis period for tax year 2000? You know that the basis period must end in the year before. As we are in 2021, which is a tax year to the government, the basis period cannot end in year 2021. The tax that the government is collecting, I'm sweating. The tax that the government is collecting right now are the taxes that their basis period for company income tax ended in year 2000. So that's why the preceding year basis is the standard, right? It's the normal thing. So you know that it must end in year 1999. So once you're having 2000, you know that something is already wrong with something is already wrong with your calculation. So you have 30th June 1999. Why 30th June? Because you're assessing under the old date first. 30th June 1999. It's always good to start from the end so that you count backward. So when you count backward, 12 months, which is the standard reporting period, you know that it will start from 1st of July 1998. Once you get this first one, the next one is easy. This is not commencement, this is change in accounting rule. So you do the second and you do the third. Then you go to the new date. What is the new date? You ask yourself. The new date is 31st December. They want to start reporting at 31st December. So ask yourself, what is my tax year? Tax year 2000. Like I said, tax year 2000, the basis period must end in the year before. So that's 1999. So that will be 31st December 1999. 12 months before. It's not December, it will be 1st of January 1999. Okay? Then you do the second and you do the third. Then now let us get our accessible profit applicable to each period. Okay? So check your question paper. don't look at your question yet. The first thing, whenever you want to get this thing, because most times you have to prorate, and that's like I said in commencement, one thing that people find challenging, like why is it 2/3? Why is it 3/12 and all of that? The first thing to ask yourself is, which period am I looking for? The profit I'm looking for falls between which period and which period? So you are looking for 1st of July 1998 to 30th of June 1st of July 1998 to 30th of June 1999. So you ask yourself, this is how the profit here, thank God. Let's ask ourselves, did they give us? They gave us this one, 12 months, 30th June 1999. Oh, perfect. I'm even looking for 12 months. They gave me 12 months ended, 150,000, right? So we just write that one. I would have written it beside it, but there's no space. So 150,000. I'm done with this. I move to the next, right? So 30th of June 2000. I'm looking for profit between 1st of July 1999 to 30th of June 2000. Let me look for it. Did they give me? Oh, so sorry. They did not give me. You have to go and look for it. So you ask yourself, which one did they give me? From this point, 30th of June 1999, the next day will be what? 1st of July 1999, which is what I am looking for here. 1st of July 1999 to 30th of June 1999. But they gave me 18 months. What they gave me is too much. But my profit falls within this range because this 18 months, let me tell you what this 18 months means. This 18 months means what? This 18 months, yeah, it means 1st of July 99 to 31st of December 2000. If you count it, let's count it though. July 99, July, August, September, October, November, December, January. Can you see? January 2000, February, March, April, May, June. 12 months. You are not done. July, August, September, October, November, December. Which is how many months? 18 months. I've gone around my finger twice, but I didn't finish it. Remains 2. So that's 20 fingers minus these 2 that I didn't count. So that's 18 months, right? So they give us, you are looking for, so you are looking for you are looking for 1st July 1999 to 30th June 2000. What you are looking for, if we spread it like this for you, you see that what you are looking for is something like this. But they gave you a whole lot. They gave you 18 months when you're looking for 12 months. All you need to do is just somewhere. It doesn't even have to be in your working. Okay, but for the sake of explanation, all you need to do is to say 12 over 18. That is what you are looking for. If you're in commencement class, you will know that what you are looking for, which is 12 over 18, what you have, times the total of what you have, which is 345,000. It's that simple. So 12 over 18 times 345,000. But the concept behind this is that if in 18 months we were able to make profit of 345,000, then in 12 months, which is what I am looking for, how many profits did we make? How much profit? Then you cross multiply. Then you have 18x is equal to 12 times 345,000. Then you now collect like them, making x the subject. Collect like times. Make x the subject of formula. You now have x, which is what I am looking for, 12 months, equal to 12 times 345k over 18. And that's where the whole concept of 12 over 18 times 345,000 came from. So in case you forget, but you don't need to be going through all these long, if 18 is equal to this and this is equal to that. You don't actually need to do that. All you need to do is to say, I'm looking for 12 months over the 18 months I have times the total of that 18 months that was available. What I'm looking for, the relative figure I'm looking for over the relative figure I have times the total figure given, and that gives you 230,000. This is, I promise you, is very simple. If you spend time with it, it's because of explanation that is long like this, so I don't even need to write all this formula out. If you spend time with it, you would understand it. So this, we've done this, right? What we're looking for now is this, which is 1st of July 2000. Do you know that this 1st of July 2000 is still inside these 18 months? Because 1st of July, you will meet 1st of July 2000 before you get to 31st July 2000. So we are already, and we are looking for 12 months, 1st July 2000 to 30th June. But 30th June 2001 is no more inside here. So you will pick 6 months from here and go and pick your remaining 6 months in the next one. Ask yourself first, which period am I looking for? Profit of which period am I looking for? This is what you are looking for. I'm looking for the profit that was made between 1st of July year 2000 to 30th of June, year 2001. Ask yourself, the first leg, which is 1st of July 2000, can I find it here? I can't find it here, but I can find it here. Because this 18 months, this is the meaning. The meaning is 1st of July 1999 to 31st of December 2000. So before you reach 31st of December 2000, you will see 1st of July 2000. So between 1st of July 2000 is July, August, September, October, November, December. After December 2000, does it make sense? So it's only 6 months we can get out of these 18 months. And this one will now be 6 months over 18 times 345,000. It's not just 6 months we are looking for. Then you say plus the remaining 6 months, 6 months over the 12 months we have here. The next one over 12 months times 180,000. Okay. So 6 over 18, because it was 18 months profit that is available. 6 over 18 times 345,000 and 6 over 12 times 180,000. You won't stop at 6 over 18 because it's not 6 months you are looking for. Look at sir. You are looking for a profit of 12 months. So this 6 plus 6 is what makes it 12 months. You will find the first half in this period given. And then you will find the second half in this period given. So that is it. So 6 over 18 times 345,000 gives us 115,000. And then 6 over 12 times 180,000 gives us 60,000. So by the time you add the two of them together, you get 175,000. So we have 175,000 for the old date assessment. So when you add that together, I have to increase my voice because of this guy's gen. When you add these three together, you will get something around 555,000. Now let us assess based on the new dates, which should be easy, right? So if you are solving, this kind of question cannot even come out in it can come out in exam for maybe 100 level or 200 levels, and not professional exams. It will be more complex than this, As in, so what I'm trying to say is that it's not this. It doesn't take this long to solve. It's something that you solve without even writing anything. You can solve it. So, what is the profit end between this period and this period? Ask yourself. 1st of December, 1999 to 31st of December, 1999. Am I giving? You go and check with the information you're giving. I was given 12 months to 30th June, 1999. But what I need exceeds 30th June. But at least I will try to see something, right? I'll see between 1st of January, because what these 12 months to 30th June 1999 mean is that 1st of July 98 to 30th June 99. Okay, so from what I'm looking for, what I can see, what this information can provide me in terms of what I'm looking for will be, it can provide me a period of only 1st of January 1999 to 30th of June 1999. So it can provide me only 6 months. So what I'm looking for now is in the remaining 6 months. And definitely I'm not going to find it in this period because this period ends here. I'll find it in the next period. So I already know that it provides me 6 months. So that's already 6 months over 12 months, right? Because why is it over 12 months? Tell me in the comment section. Because it's 12 months information. If it's 8 months that they wrote here, it will be 6 months over 8 months. Oh, you understand? So because what's given here is 12 months. And they might not write it as 7, they might give you as year ended. And you know that year is 12 months. But they give you period ended. You have to go and find what is that period. You say the end of this year. The next date after. You get my point. Let's go back to our point here. Let me not digress. So we already know that this one can only provide us 6 months out of 12 months times what? 150,000. I already know that one is 75k. Now, you already know that you're looking for the next 6 months. If I want to get the first leg, it's so simple. There's only 6 months you're looking for, which will be 6 over 18. Because the next period, you find it here, right? You know what you're still looking for is what? You're still looking for from 1st of July, 1999. From 1st of July 1999 to 31st of December 1999. And it is here you will find it. Because it's 18 months, like I said, it means 1st of July 1999 to 31st of December 2000, which is 18 months. But you are looking for only 6 months. And it captures it for you perfectly. So that's 6 over 18 times 345k. And that gives us 115,000 plus your 75,000. You have 180,000. Okay, 190. So we've done this first year. It gave us 190,000. So The second and the third year, I feel like you should go and do that one. Maybe I'll just even stop at one question instead of doing two questions so that the video is not going to be too long. But if you have any questions, please ask in the comment section. I feel like I'm even promising and failing because I don't want the video to be too long and boring, you understand? But what you can do is that you can check other textbooks or try to reframe this question. Maybe just change the year end and just practice other questions on your own. You know, basis period is actually very important in taxation. So the next period you're looking for is 1st of January 2000 to 31st of December 2000. Where can I sit? I can already sit 31st of December 2000 here. And I'm looking for only 12 months, but they give me information of 18 months. I just do 12 over 18 times 345,000. How easy is that? So we have 12 over 18 times 345,000. And why? Why is that? That's because this 18 months to 31st December 2000 means 1st of July 1999, which I don't even need here. 1st of July 1999 up until 31st December 2000. So I will see 1st of January 2000 to 31st December 2000 in this period given. So that 1st of July 1999 to 31st December 1999, I don't need it. That's 6 months, first 6 months, I don't need it. It's the 12 months I need. So all you need to do is to prorate. It's called prorating. 12 over 18 times 345,000, okay? And you have 230,000. So you've done the second year. You know why we are doing it? Because we want to compare. You know, you give your comment after that. Oh, I'm sorry, Alaji Mekudia, what's his name? The tax authority would, because you are the accountant, you are the tax consultants here. That's why you are learning. Yeah, don't always see yourself as a taxpayer. That's another thing. Don't see yourself as a taxpayer. Always see yourself as an independent body, because if you're an accountant, you are the intermediary now between the that's in terms of taxation, between the tax authority and the taxpayer. If you're focusing on tax, that's what you're going to do majorly. So let's move to the third year. We have 1st of January 2001 to 31st of December 2001. It's so easy. Yeah, it's 180,000 because it's given already. At that point, you've already switched. Can you see? They gave you the information you need. So at the point when you are calculating and saying, oh, I can't see my information in this place, just so that something is wrong with your calculation, you have already entered river. That's what it means. So it's 180,000. This one is so easy, just like this one that we just picked, 150,000. So you have 180,000, okay? So you add up, and that gives you about, thank you so much, that gives you 600,000. Now, you have 600,000, you have 555,000. Tax authority will pick the higher, which is 600,000. So you want to be assessed based on new dates, but catch you. That's why you should try to remember the whole selection. So your conclusion will be not right now based on the computation above. Alaji Mekudi Limited will be assessed for tax based on the new accounting date because it provides because it gives a higher assessable profit, which means a higher tax liability. You know, these are just assessable profits. If you are calculating the taxation itself, that way you now take the assessable profit and go and start adding loss relief, add back, and all those things to get your tax liability. So what I'm trying to say is that a higher assessable profit will mean a higher tax liability. Right. So let me know if you understand this question in the comment section. You could even send me a WhatsApp message. The WhatsApp link is in the description box. Let's just move to the third abnormal situation, which is cessation, and that one is pretty easy, which is cessation of business. That's when a company wants to close its operation. So click this video if you want to understand that. Bye.